In the acquisition, we saw something else that was extraordinary. What we saw was that the equity shareholders had precedence over the bondholders, and the bondholders got wiped out. So the crazy part is that the AT1 convertible bonds listed in cases of a write down that the bondholders will receive nothing and no more interest will be accrued. And this is amazing because the waterfall works like this. You have the depositors, and I'm just going to kind of get through where I can simplify this. You have the depositors at the top. They're protected by the FDIC, things of that nature. And then you have your bondholders, and then down here you would have your equity stakeholders, and those are guys that invest through, you know, stock markets, etc. And in this case, the ones that got rewarded were the equity stakeholders, and the ones that got the short end of the stick were the bondholders. I think this makes bondholders very nervous, and it sends the wrong message that bonds are not very strong. And it just changes the landscape already just with something unprecedented like that. Meanwhile, we can argue that this wasn't really the issue with Credit Suisse was not a liquidation a liquidity issue. It was an absorption event. And so how you interpret that and how you're going to argue that is if it's a liquidity issue, it will trigger what was written within the bond contract, which was that you would convert the AT1 contracts or those bonds into equity. And in essence, that would be cash. And that's how you would take that cash and fuel that back into the banks. And now, depending on which side of the fence you sit on, if you're on the side where you're a bondholder, you're going to probably argue that this wasn't a liquidity problem, so there's no need for a write down. Instead, it was an absorption. And so I think we'll begin to see arguments there, but I don't know who will prevail because this is unprecedented in the events itself. And if that's not crazy enough, the Feds decide to raise interest rates again another quarter today on March 22nd, 2023. And so I would probably argue that wasn't the right move to make. I understand that we're still trying to solve an inflationary concern, but the truth of the matter is that after everything that we had already seen, the very problem that we had was that we had banks that had invested in long-term treasuries, and now that the rates have been that we've raised the interest rates, that we have to go back and say, okay, wait a sec, how many other banks are systemically in trouble? And so in order to stave off the contagion, we should probably wait or hold off on that until we get a better feel for what's happening within the market conditions. Instead, the Fed went right on ahead and raised interest rates another quarter. And so my guess on that's going to cause more problems. And I don't think that we're solving issues. I think we're creating more catastrophe, and that we'll have to wait to see how that kind of plays out.